I welcome all of you to today's session of Market Movers, in which we will take a look on the euro, which seems to be taking a breather after this fantastic rally, starting from the levels close to 1.12 to now almost about 1.17. For the last two trading sessions, it has been trading in this range, just holding above 1.17, and it is indicative of the fact that after this extensive run, the fatigue might be setting in, and we are likely to see this sideways momentum with a bit of bias on the corrective side prevailing in the Euro USD in next few trading session. If you consider the trading context for the day, we had data releases earlier during the Asian trading hours. For the Australia, we got the CPI number. Then moving on to the European trading session, we got some important releases for the UK, but we will not go into the details of those. And now for the US trading session, just a while back, we also got the trade balance data, and there for the United States, trade deficit stands above, just little above US dollar 70 billion. Moving on to the uh, commodity segment, we have these release lined up, and we will be getting the WTI's crude oil inventory data, and here the expectation is that we are likely to see drawdown after yesterday's API data, in which we saw almost 6 million barrels of drawdown. I think the expectations are high here as well for the EIA's release, and we will see what kind of impact that likely casts on the light crude oil prices. The light crude oil has been trading above US dollar 40 per barrel levels for almost a month now, and I think these levels are likely to hold well. If we see drawdown again, that will be the indicative of fact that demand is picking up, and the market is not really getting flooded, and that will be helpful for the consolidation of the light crude oil prices, with a bias remaining tilted on the upside. Later in the day, we are also scheduled to get the Federal Reserve's monetary policy announcement, and here there is no expectation of any changes in the current federal fund rates regime, and the federal fund rates are likely to be left unchanged at the band of 0.0% to 0.25%. So in this interest rate band, we are not expecting any change. And apart from that, we have already got yesterday's announcement that the Federal Reserve is extending its emergency lending program till the end of the year, and that has also taken a surprise element away from any fresh announcement in today's session. I think Mr. Jerome Powell, the chairperson of the Federal Reserve, is likely to strike a cautionary tone, and he will be emphasizing that economic outlook still remains challenging, and because of that, the Federal Reserve will stand ready to do whatever it takes to restore stability and confidence in the economy. Moving on to the technical segment, here we will consider the euro against the US dollar, and then we will move on to the equity indices segment, in which we will see the S&P 500's technical outlook. Now let's start with the Euro USD's technical outlook. This is the daily time frame chart, and the levels on which this consolidation happened closer to 1.12 provided a excellent launching pad for the Euro USD. Now in the hindsight, we can say that, and even during those consolidation days, we had done some of the webinars in which I was emphasizing on the possibility of continuation of the bullish bias in Euro USD, and that has really hold well. And here we are seeing Euro USD trading above 1.17, and this is happening after a long time, of course for the first time in 2020 at least. And in Euro USD, I think now that we have already seen this extended run of more than 500 pips, we might see some consolidation happening in the Euro USD. That doesn't really mean that we are likely to see big sharp fall in Euro USD. I think the possibility remains pretty low, and after due consolidation, it might go either way. But for the time being, since it has run up considerably, we might see sideways kind of action. And of course, today is the day of the Federal Reserve monetary policy announcement. So any announcement there is likely to cast a long shadow on Euro USD's price moves. So after the announcement and the chairperson's press conference, we might expect some volatility. So be wary of any trade in today's session, as we are headed for the monetary policy announcement. But the underlying bias still remains on the bullish side. Of course, the bulls, as I said earlier, while starting the webinar, that bulls might be feeling fatigued. So that is one aspect to take into account. And here, if we speak technically, we have this third resistance of this month's pivot point series around 1.173 zone, and as you can see, the Euro USD has been holding closer to this resistance zone for last two trading sessions. Even in today's trading session, we saw a sharp sell-off after it tries to retest the levels close to 1.177, and from those levels we are seeing Euro USD has fallen almost 50 pips, and it is of course finding some support on the lower side, and it has support around 1.17. So it will be interesting to see how the day ends, as that will be crucial for our understanding. If we get any fresh break below this immediate swing low, then I think that will open up the possibility of Euro USD even going towards 1.16 zone in coming session. But for that to happen, we need a break below this immediate support zone. So from that perspective, it's going to be interesting to see how the day unfolds for the Euro USD. The regression curve has shown this steep curve on the higher side, and also the pivot point series is showing the fact that Euro USD is still in the bullish phase, and only thing is that it has run up considerably higher, so we need to be a bit cautious while going long as well. And on the other hand, if you consider this hourly formation, here you might simply join these prior swing lows, then you get a straight this upward this momentum, which has lasted for almost a month now, and then on this consolidation phase, we are finally seeing some break on the lower side. So if we get this break below this upward moving price channel, then I think, as I said, the possibility opens up that we might see Euro USD moving closer on the lower side towards this 100 SMA, and it is of course a difficult day to call for any trade, as we are headed to the monetary policy announcement, and because of that, prior to the release, we are not expecting any big moves. So I would suggest that instead of going for active positioning, you might simply sit on the sidelines for next few hours, and till then better clarity will also emerge. And here the key is that anything above these immediate resistance zones above 1.177 will further open up the space for Euro USD to rise towards 1.182, and as I said, if we don't really see momentum picking up, then most probably, if the Euro USD is holding close to this 1.17 zone, then eventually a break on the low side can be expected. So watch out for this formation of ascending triangle pattern, and right now it is showing the increased probability of a break on the downside. So let's see how this unfold. Now let's move on to the S&P 500 technical outlook. This is the daily time frame chart, and as we saw, the fantastic rally, the extensive rally in Euro USD. So the S&P 500 rally has nothing less spectacular. You can say it has been robust run for the S&P 500 almost 50 percentage point from the lows, and now after getting close to 3300 zone for last 3-4 trading sessions, S&P 500 has been consolidating around these 3200 zone, and it can be considered as a consolidation, but we are yet to get any clear cut break on the lower side, and because of that it is becoming increasingly difficult to make assessment of the near future course of action for the S&P 500. On the lower side we have support coming into play around 3000 zone. We have these prior swing lows as well as these 23.6% Fibonacci retracement of its rally starting from 2200 to almost 3300, and taken together both these factors are likely to act as a near-term support around 3000 for the S&P 500. Now if you cover the 4 hourly chart, here we have these first resistance of this month's pivot point series, and finally, after consolidation and failure to retain the price action above this, we have a break below this first resistance of this month, and that increases the probability of S&P 500 moving lower towards these immediate swing lows around 3100 zone. So we are banking on that, and also the price action has entered into the lower band of this regression curve, and I think if we don't really see the price action getting back in the upper band, then it will flatten to some extent, and then eventually we can even expect the curve to bend on the lower side. And coming to the hourly chart, we have this immediate resistance zone taking shape around this 3250 zone. We have this confluence of 50, 100 and 200 SMAs converged around this 3230 to 3240 range, and also on the higher side we have these prior swing highs, which are also likely to act as a near term resistance for the S&P 500. So taken together, all these factors are pointing to the probability of going for a trade on the short sell side, and it is likely to be profitable. So suppose if you want to take any trade right now in the S&P 500, that is most probably a short sell trade, and here as we were also discussing during the Euro USD's technical outlook, we have to keep in mind that today is the day of the monetary policy announcement, and because of that we will see increased volatility near the release of Federal Reserve's monetary policy and the press conference. But watch out for the technical space, technical levels as well, and any signs of reversal happening closer to this immediate resistance zone will add confirmation to our analysis that we are likely to see the S&P 500 moving lower even below this prior swing low around 3200 and head towards 3100. So if that's going to happen, of course we can't ever be sure, but if we are going to profit from our anticipation, then we will have to make the risk reward ratio also optimum, and I think a risk of around 1 percentage point should be good enough for the S&P 500. So a stop loss just above this prior swing high in the price band of 3260 should be good enough, and any entry around this price band of 3230 to 3240 should be good enough for fresh entry. And on the lower side we can at least try to make it 1:2, so the risk will be half of the reward we might fetch if we get our anticipated levels right. So that will naturally open up the possibility for the S&P 500 positioning to be kept towards for the price target of around 3170 or even below that, and that is likely to grow profitable in near future. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.